Saturday, February 25th, 2017, Monaco 64, home of alternative economics and contrarian views. So this morning, I want to talk about the bigger picture. I want to look at how all different asset classes, currencies have been doing up until now for 2017. I know a lot of people think that looking at year-to-date things don't mean anything, but it does give you an idea of the trends, in my opinion. And a lot of people, investors and fund managers, they decide things on an annual basis. So it does make, I think it is quite fairly relevant. I also want to talk about at the end, towards the end of my video, about what I see coming in terms of deflation, inflation, and hyperinflation, and what it all means, in my opinion. So we'll start out with year-to-date numbers for gold. Gold is up 9.56% year-to-date, so that's a pretty good performance so far. Silver up 15.33%. So silver is actually leading the way, which is a good thing in a precious metals bull market. The dollar index, you'd think it would be down quite a bit, but it's down only 1.1%. So it just goes to show that those people who put too much importance on the dollar index, in my opinion, are a bit misguided. I think gold and silver are the best measures for the health of any fiat currency. British pound is up 0.99% year to date, so almost up 1%. The euro is up 0.44%. Swiss franc is up 1.1%. Canadian dollar doing fairly well, up 2.65%. And I also want to look at the price of gold in sterling, euro, and Swiss franc, and also the price of silver in sterling and euros. So XAU GBP up 8.55%. So that makes sense because the pound is up 0.99 against the dollar. So XAG GBP up 14.26%. So all very good performances. XAU EUR up almost 9%, 8.93. XAG EUR, silver and euro, up 14.92%. XAU CHF, Swiss franc, 8.4%. So you can see that gold is doing well against all currencies. And the dollar is a little weaker against these major currencies, but not that much. So gold, you'd expect gold only to be up 1% because the dollar index is down 1%, but it's not true. So in my opinion, it looks like the trend for this year is for gold to do well against all fiat currencies, in my opinion. So, and now I'd like to look at the stock market, because the mainstream media, mainstream economists, they all talk about the FTSE here in the UK, S&P or Dow in the US, the DAX in Germany, or the CAC 40 in France, or the FT 100 MIB or FT MIB in Italy, or the SMI in Switzerland. And they never, look at the at gold and silver to see how they're doing against, their currencies. National currencies. So S&P 500 up 5.74% on the year. So gold is, silver is outperforming that by, about 10%. Gold is well outperforming by about 4%, just over 4%. Dow Jones up 5.36%. NASDAQ is doing a little better, 8.59% up, but gold and silver still outperforming those. The DAX in Germany up 2.81%. CAC 40 in France down 0.35%. The MIB in Italy, the Milan index, down 3.32%. FTSE 100 up 1.41%. XAU GBP is up 8.5%. So, you might think you're doing well in the FTSE, up 1.1%, but in real money, in gold and silver, no. The SMI in Switzerland up 3.72%. So as you can see, all the major currencies are fairly steady against each other. You have the dollar's down slightly, not more than just over 1% against, the other major currencies like euro, sterling, and Swiss franc. And Canadian dollar is a little better because of the precious metals connection. So all I'm trying to say is that, yeah, you can have precious metals do well despite a very steady dollar, and that's what we're seeing today. And now I want to bring up, some charts, and I'll start out with gold. Look at it quickly, the technicals. And you can see the chart here. It's you've probably seen it before. I think we've gone up 8 out of the last 9 weeks. It hasn't been, it's been fairly steady. Step up and then leveling, step up. So it's fairly steady move up. 1248.74 there you can see is the 50% retracement of the move. From the not all-time high, but from the high last year to the low in December last year. So we've broken through that 50% retracement. You can see that the next level, the 61.8 retracement Fibonacci level, 61.8 is more important in my opinion than the 50%. It's the golden mean Fibonacci number, and you can see that it looks like it's right on that trend line from the all-time high in 2011 for next week. So, and it's going to be just around that 1280 level. So very interesting chart there for gold. Now we're going to look at silver. Let's bring up the silver chart. Yeah, so silver, you can see, actually, I think it's gone up 9 out of the last 9 weeks, so it's done better than gold. But it looks like an orderly move higher as well. It's not a spike higher. It's a gradual move up. We're right on the 50% retracement of last year's high and the December low. It looks like it's right around 1838, and which is pretty much where we closed on the week. So pretty interesting. The 61.8 retracement is right around 19. So that's the silver chart. I'd like to bring up also Bitcoin. Bitcoin, I guess year to date is not performing that great because we got up to, pretty much where we are right now in Bitcoin year to date. We saw a huge drop, of course, to around 750. But as you can see, that cup and handle, the handle part seems to have formed a lot quicker than I thought it would. I thought it would drag out a little more, but as you can see, we made an all-time high yesterday. I think it was 1222. So, I mean, the objective would be the distance from the bottom of the cup to the top of the cup, which is about $1,000. From 200 to around 1200. So you add that 1,000 to the top of the cup and you get 2,200. I'm not saying it's going up there tomorrow or next week. I'm just saying that could be an objective going forward, 12, 18 months. I'm not difficult to say exactly. So that's Bitcoin. And now I want to go and look at the S&P 500. And I want to bring up a chart here. I brought up a chart, a 20-year-old chart. You can see S&P 500 weekly chart from 1997 to present day. And I've put a few annotations there. You can see in November 2008, start of QE by Federal Reserve, or quantitative easing. That's when they announced in November 2008 that they'd buy 600 billion of mortgage-backed securities. So you can see the market still went lower, and it bottomed in March 2009. They continued doing QE, and then you can see by 2013 it looked like the market was stalling, and they announced QE3 on the 13th of September 2012. And that's when also gold turned around, and then started going down, especially I think it was February 2013. You would have thought with that QE3 announcement that gold was going to go a lot higher as well, but it didn't. So you can see after that QE3 announcement, we broke very key resistance there, just below 1600 in the S&P. You can see in the dot-com bubble, we topped around that level, and then in the housing bubble as well, we topped around the same level. And we've been in breakout mode since beginning of 2013 after they announced QE3, and it's been a one-way street until 2015 when the Fed was talking about hiking rates. Most market participants thought that the Fed would embark on not only on just one rate hike, but several and very close together, meeting after meeting, just like Greenspan used to do. And that's why the market tanked in the beginning of 2016, because market participants thought, the Fed's going to continue raising rates, but they didn't. They stopped. And they only raised rates again a year later, as you can see there, hike from the target of 1/4 to 0.5% to 0.5% to 75 basis points. And we didn't see, the market tanking after this latest rate hike like it happened in December 2015. And why is that? I personally think that the market has lost faith in the Fed, and that they've lost faith that the Fed will actually defend the US dollar. And that's why the stock market is going up. That's a debasement of the currency. The fact that stock market prices are higher, that means the dollar buys less equity. So that's, telling me that people have lost confidence. They don't really think the Fed's for real. They bark and they don't bite. And I talked about this before. So yeah, that's the S&P chart. So it looks to me, S&P chart is pointing to some kind of inflationary, maybe even hyperinflationary event where market participants lose confidence in the currency. We'll have to see. But I'd like to bring up a chart now of the German stock market in marks and US dollar in the 1920s during the period of the Weimar Republic. You can see there the black line is stock market in Reichsmarks or Deutschmarks or marks at the time, I think. You can see that up until September 1922, from January 1920, the German stock market was fairly steady in Deutschmarks. It was going and fairly steady in dollars as well. It's pretty, and then you can see that in US dollars it actually started dropping, but in marks it started going up, and you can see it was below 1,000 there, and then by January 1923 it was more than 10,000, and the dollar had gone up against the mark. So in mark terms it was doing well. And then you can see that it really took off somewhere just before July 1923. It was just below 100,000, and then it took off, to almost 100 billion marks. In dollars, though, as well, it did continue doing fairly well. In January 1924, you can see there's around 27.5, and in January 1920, it was around 10. So the German stock market, which was composed of industrial companies, major industrial companies that had real assets, did quite well during the hyperinflation. So what am I trying to say? Well, you know, unless the Fed embarks on Greenspan-like monetary policy, I know he was very accommodative at times, but he did take away the punch bowl, so to speak. Like, I think 2003, 2005, he raised rates from 1% all the way up to like 5 or even 6. I'm not sure exactly what rate. Unless the Fed starts this kind of policy, we could see the Dow continue to go higher. But I think gold and silver will go even, you know, will outperform the move in the Dow in US dollars, and will do even better. And it makes you wonder, you know, if this has been done by design. And why do I say that? Well, there's a lot of you probably have heard about the Economist magazine from 1988. As you can see here, I've got the picture of it. It says, "Get ready for a world currency, 10 Phoenix 2018." And below the Phoenix there, you can see all the paper currencies there from all around the world there. They're burning. And the Phoenix is wearing like what looks like a gold coin, rising from the ashes of the fiat currencies. A lot of you probably know that the Economist magazine is owned by the Rothschild family, and the Rothschild family, they're involved in a lot of things. They have a lot of influence. I've done a video before about the global warming agenda, you know, the green agenda was actually started by one of the Rothschilds in the 1980s. I think it was Sir Edmund de Rothschild, I think. And he met up with these, he was pushing for this green agenda with another guy. I think his name was, I forgot his name, but I did a video on it, and I'll put it up in the information above, and you can look at it. So yeah, the Rothschilds are involved in loads of things. So, you know, maybe, you know, this is all done by design. So that's what I see going forward. That's my big picture. I don't think we're gonna get Goldilocks. We're not gonna get, you know, like the 90s and before 2008, where, you know, you had pretty steady financial markets, asset prices went up, and consumer prices were pretty much in check. I think we're either gonna get we're gonna get a collapse. Either way, it will be either by the collapse of fiat money or the dollar and all the other, you know, fiat currencies, and that will be reflected in the precious metals prices in Bitcoin. Or the other unlikely situation, in my opinion, and I say unlikely because of what the Dow and the S&P are doing, which is pointing to, you know, much higher prices, and so, you know, debasement of the dollar. The other route could be a deflationary collapse, but for that, the Fed would have to basically start hiking interest rates every other meeting or every other meeting by like 25 or 50 basis points, and I don't see that happening. So yeah, that's it. If you enjoyed this video, please give me a thumbs up, share it far and wide. If you haven't subscribed to my channel yet, please do. If you'd like to donate to my channel, there's some links below in the description. Take care. I'll talk to you later. Bye.